Dale, financial services face mounting risks. Minor IT disruptions now trigger regulatory headaches, reputational loss, and real financial penalties. Yet, despite investments in monitoring tools, many banks remain stuck in reactive firefighting. Can you start by explaining why AI and ML are becoming essential for managing IT operations in such a high-stakes environment?
Absolutely, Matthew. The sheer scale and complexity of modern financial IT systems now outpaces human ability to keep up. Traditional eyes-on-glass monitoring is reactive and simply can't deliver the speed or precision needed. AI and ML, especially with advances like generative AI and large language models, are being introduced to help predict failures before they occur and enable systems to self-assess, evaluate, decide, and even take action without waiting for human intervention.
That's a significant leap. With this shift towards automation, are we seeing financial institutions move away from legacy tools and towards more autonomous platforms? And what exactly is driving this migration?
Yes, there's a clear pivot from legacy monitoring tools to next-generation AIOps platforms powered by generative and agentic AI. The driving force is the need for systems that can handle everything from provisioning to monitoring at scale, offering proactive rather than reactive responses. This transition is both technology-enabled and necessity-driven, as the cost of downtime or missed incidents in finance can be astronomical.
So, the stakes are higher, and so is the need for intelligence embedded directly in the infrastructure. As we continue, let's talk about how this changes our understanding of IT infrastructure itself. Traditionally, infrastructure meant data centers, hardware, and physical networks. But now, with agentic AI, it seems the definition is expanding. Dale, can you elaborate on how AIOps teams need to rethink infrastructure in this new context?
Certainly. The goalposts have truly shifted. The new objective is self-healing systems platforms that monitor, detect, correlate, analyze, decide, and remediate issues automatically. Infrastructure now encompasses not just physical assets, but also software layers, service dependencies, and dynamic topologies. Agentic AI is being embedded into these systems, making them not only smarter, but also more autonomous, capable of executing tasks without constant human oversight.
That sounds transformative, but I imagine it brings new challenges, particularly around trust and reliability. How do organizations ensure these autonomous agents make the right decisions, especially when so much is at stake?
That's a critical issue. Technical trust is established through structured, machine-readable knowledge, often in the form of knowledge graphs using standards like RDF. By capturing not only systems and applications, but also network topologies, service dependencies, and even environmental factors, we provide AI with a holistic view. This structure enables more accurate reasoning and helps ensure decisions are based on comprehensive, verifiable data.
So, in essence, infrastructure is now as much about the intelligence and data interconnections as it is about servers and cables. Let's dig further into how this structured knowledge actually enhances AI's performance. You mentioned knowledge graphs as a foundation for both human and AI understanding. How do these actually work in practice to improve the accuracy, reasoning, and trustworthiness of AI-driven operations?
Knowledge graphs act like highly organized maps of all relevant system knowledge, hardware, software, dependencies, fault patterns, even environmental data like server rack locations or weather conditions. By feeding this structured knowledge into AI systems, we do four things: increase answer precision, enable better logical reasoning, provide explainability for every decision, and set guardrails to keep AI within trusted boundaries. For example, if an outage is detected, the AI can trace causal chains through the knowledge graph, explain its logic, and verify each step.
That level of transparency must be reassuring for both technical teams and leadership. Are there any concrete metrics or studies showing how this boost in explainability and trust translates to operational improvements?
Yes, absolutely. Organizations using explainable, knowledge-driven AI have seen resolution times drop significantly. For instance, when simple failures like memory shortages occur, fully autonomous remediation can be triggered instantly, reducing downtime, In more complex cases, the AI acts as a co-pilot, offering recommendations with clear explanations, which can then be reviewed by humans or even other AIs. This not only increases confidence, but demonstrably improves incident response metrics. Some firms report over 85% of issues detected and resolved before impacting customers.
It sounds like these knowledge frameworks are the linchpin for both automation and trust. Next, let's discuss how these advances drive real-world efficiencies at both technical and business levels. With all these technical advances, what specific efficiencies are financial institutions realizing from reduced manual toil to faster innovation cycles? And for those just starting out, what early wins can they expect when pitching AIOps to leadership?
The biggest initial efficiency is in dramatically reducing resolution times for common incidents. Simple, repetitive problems like server overloads are now autonomously detected and fixed. As confidence grows, more complex scenarios are addressed with AI as a co-pilot, offering analyses and recommendations in context. Over time, this approach not only slashes manual workload, but also accelerates the deployment of new financial products. Some organizations have seen a 50% reduction in time to market for digital services and a 20% annual improvement in operational efficiency.
That's remarkable. For teams trying to secure executive buy-in, what's the best approach to prove value quickly and avoid getting stuck in endless research or pilot phases?
Approach it as a journey along the decision chain. Start by automating detection and correlation of incidents, which is where the highest volume of manual work occurs. Set clear objectives and measurable ROI for each step. Don't aim for perfection at the outset. Instead, deliver incremental value in 60 to 90-day sprints. These early wins build momentum and confidence, proving that the path to autonomous operations is both practical and transformative.
In summary, the combination of agentic AI, explainable knowledge graphs, and incremental automation is unlocking unprecedented value both in technical operations and business outcomes. Dale, thanks so much for sharing your insights today.
Thank you, Matthew. It's been a pleasure discussing these exciting changes in financial IT operations. Goodbye.